I record this video after close trade Wednesday, 5th of December 2012. In fact, it's the next morning here, Thursday morning in France. Beautiful day today. After 3 or 4 really stormy days, we've got kind of clear skies and bright sunshine, and surf's up. So heading out to the beach kind of shortly. But just wanted to get this video out. Big story from yesterday was the down move in Apple. It was down 6%. Huge kind of move. And what I want to talk about just quickly in this video is the cult of Apple, and there's a couple of other cults going on as well, gold and silver. And what's in common with each of these markets at the moment is they're at key levels where all of a sudden the amateurs in those markets really start to lose confidence, and they're kind of the beginnings of a little bit of a shakeout kind of downtrend type move. So just want to go through those charts. So first of all, Apple, I mean, with all of these markets, I do understand the fundamental story. I appreciate and agree with the fundamental story. You know, Apple is a great company. There's a lot of cash. It's done extremely well. I own, like everybody else, you know, half a dozen Apple products and so on, so I get that. Same thing with gold and silver. I get the quantitative easing story and why gold is going up, because we're printing money and so on. So all of that, you know, well understood. But there's a difference between, you know, the long-term story in those markets and what the chart is kind of showing. So let's just look at the Apple chart over the last couple of months. So Apple topped out at the incredibly important psychological level of $700 up here, and this was the day, I think the iPhone release was right up here, you know, within a day or so of this kind of high being made. And we'd had our exhaustion buying and bearish divergence on the daily chart. We kind of topped out at 700. I think it was level was 705, and then we just rolled over and broke into a downtrend. And I think the strength of this downtrend really surprised people, and this is why this was kind of signaling that this is actually an important top, because if this were just a shallow retrace and the professionals kind of stepped in at $600 or the 200-day moving average, whatever it might be, as a level to pull it, to pick it up and push it back to kind of new highs, that would be one story. But we didn't do that. It kind of kept on going, and it did fall pretty hard through down to 500. I think the low here was 505. And so because the strength of that down move just shows that people are really, you know, willing to sell out of Apple, and so this uptrend, certainly for the time being, is over, and we're going to have to see exhaustion selling signals on the weekly charts in order to kind of find a bottom for this and reverse it and kind of test back up. But so for the time being, because of the strength of this down move, you know, it suggests that there's going to be continuation on the downside. So, you know, the people that couldn't get out at 700, this thing goes through 600 and they start to really panic. And at 500, they start to, well, maybe, you know, when it gets back up to 600, I'll get out there. I'll be happy with 600. And this thing moved back up. It was a very weak amateur-led kind of rally back up to 600. You see amateur up bars. Finally, a rainbow pattern gets within $5 of the 600 level, and then we get a little rainbow pattern, cyclical resistance kind of coming in due here. We start to roll over, and then as soon as that yesterday's activity started to accelerate on the downside, it was down 2, then 3%, and so on. All of a sudden, people are panicking. Couldn't get out at 700. You missed the 600 level. My God, I better get out of this thing now. And so, you know, the next kind of critical psychological level is 500. And with the, you know, quite a few days to run here, pull back to end of trend on Apple, I think we'll punch through 500. And again, that'll have a psychological impact. So you got this kind of cult where people are, yeah, they believe the long-term story, but actually the chart is showing them that there's kind of real weakness, and they'll start to panic at some point and then kind of get out. And that'll be the point where the professionals will kind of step back in and push this back up, but it's not happened yet. And that activity yesterday psychologically was really just an important point. And again, it's happening at these key levels, 700, 600, 500, back to 600, and so on. And so that's what's kind of driving the story in Apple. If we look at the long-term chart, the weekly chart of Apple, I mean, it's been an incredibly long story. And I must admit, you know, I've missed, you know, timing the top of this market, because the strength of this market has been absolutely huge. I thought a year ago it was topping out with this kind of pattern here. If you see from 2009, we kind of bottomed out with exhaustion selling and bullish divergence, and we've raced away from there at the $100 level. I mean, back in 2000 it was back down at $10, but you know, the latest kind of push up was driven off that exhaustion pattern on the way up. And you can see we went through 3 kind of series of pullback to end of trends before we finally, you know, exhausted this trend move. Trends do eventually kind of top out. This wasn't enough, that exhaustion, bearish divergence, pullback to end of trend. We just punched through there, make another one, another exhaustion, bearish divergence, punch through there again. And this last move was kind of set off after these amateur down bars kind of here into support, bang. But this last little move up to 700 did have a different kind of characteristic about it. The amount of buying that we got into this peak generated a flush pattern rather than exhaustion pattern, so it's flushing out the last of those buyers. And then the move back up into this pullback to end of trend signal here, you can see a beautiful little rainbow pattern right at the top there with amateur up bar, buying into these new highs at 700, thinking that with the release of that the iPhone 5, it's just going to explode to the upside. And no, professionals come in, take profits, then sell it down here, and we get really going on the downside on this move down into 500. Now, yes, there's been some professional activity at the lows down here, but they'll just be acquiring at kind of particular levels on the way down. The reason I don't think this is over, I think we need to see some kind of proper exhaustion signal on the downside on the weekly chart in order to end this thing. And remember that trend trumps cycle, so the strongest move is going to be the trend move, even on a lower time frame. So this has to play out first before the cycles kind of come in to play. So let's see where the pullback to end of trend goes on the daily chart before seeing where, if the professionals are kind of picking this up and we have enough exhaustion selling on the downside to get a proper rally on the way up. But yeah, just referring back to this kind of cult story, we're at a critical point that all of a sudden people are starting to not change their mind a little bit, but get a little bit confused. They don't understand the weakness in the chart and the selling that's happening as profit taking kind of going on, although everybody understands the strong long-term story in Apple. But there are times when the professionals are taking profits and the amateurs are getting spooked, and that's exactly what we got yesterday with this move here when we didn't get up to 600. And then a similar type pattern is happening on gold and silver. And I'd referred to the gold chart, the weekly gold chart, a couple of weeks ago, saying, just be wary of this blue professional up bar here at that point. I was saying that was most likely professionals kind of getting short. Because if there was professional money acquiring kind of the lows, you'd have seen it on the way down on these kind of down bars. You'd have seen professionals kind of coming in here. In fact, what that was probably resting sell orders of the professionals as we got this little bit of a counter trend rally, kind of coming back up. They were kind of using that opportunity to get short. Now we did punch through the highs of that weekly bar, and what that was a little fake out move that they drove entirely during the Thanksgiving weekend and holiday. They pushed it through there just to get people thinking, psychologically that we're kind of going to break to new highs, and what we've had in the last couple of weeks is kind of continuation of the downtrend here. So we've had blue selling it down hard, bearish divergence right, close-ish to the zero line here. And the story in gold was, last year we had the debt ceiling kind of shenanigans kind of going on, and that was, with all the quantitative easing story, and everybody started to understand, the mainstream media started to understand, what quantitative easing meant, and so that was a huge rush into the gold market. Kind of peaked last year up at or just under $2,000. These kind of critically important kind of levels here, so just under $2,000. Then we kind of sold off. We came into a rainbow pattern here where the amateurs were a little bit kind of spooked, selling short, a little pullback to end of trend on the way back, and we've kind of tested back up. But on the test back up, the critically important level has been $1,800 here. So the first time we come into it at the beginning of the year, cyclical resistance, blue professional bar kind of comes in at high. Next time, $1,800, another cyclical resistance level kind of comes in there. Bearish divergence with this last little test up, and they're kind of selling it down at the moment there. So again, there's going to be this kind of discontinuity between the cult of gold and silver, and people saying, well, gold has to keep on going up because we're continuing to print money, and that's true. But the professionals in the meantime are taking opportunities at extremes to take profits, and they've done that last year. We're testing back up. They're using the opportunity to test back up to 1800 in order to take profits again and kind of set this thing off on the downside. And so this won't be done on the downside until we get some kind of exhaustion pattern on the way down. And if you look at it on the daily chart, this was the activity that we had. So again, coming into 1800, all the exhaustion, blue professionals up bars, kind of taking profits, bearish divergence, rolls over. This is this little kind of, first of all, they're kind of selling it down really hard here at this point, and then using a little bounce. It was like almost like a manufactured bounce. There was such an odd little pattern there in order to get short. And the highs of this level were really critical, but we just punched above it on, that was Thanksgiving, the Wednesday, Thursday, Friday, I think, of Thanksgiving there. And they just used that as a psychologically kind of little trigger. I mean, thin markets, all of those things in order to goose it up a little bit, and so the amateur's thinking, wow, it's kind of going up. And you saw, the stories coming out of the gold and the silver bugs that these markets are starting to take off, and now in the last 2 weeks they've kind of reversed and gone the other way, and we've got all this kind of dissonance happening in the cult media, saying it's got to keep on going up, and the rhetoric gets stronger and stronger, talking about quantitative easing and destroying the dollar and all of those things. But there are times when the professionals are taking profits, and the long-term story might still be intact, but there are times when the trend is reversing and go the other way. And you look at the weekly chart, and we're in a downtrend until we see exhaustion on the downside. So I'd expect this level here, again, critical level 675 down here, to be kind of hit on the way down. And as soon as we start breaking back down through these lows at 16, if we get to 1600 and below, again, these psychologically important levels will cause the rhetoric to go up and the amateurs to kind of panic. So meanwhile, the professionals have been stealthily taking their profits at the highs, up the 1900 level, at the 1800 level, at the 1800 level again, kind of rolling over. And then silver's a very similar story. The peak in silver, silver was kind of falling behind gold. The gold-silver ratio had kind of fallen out of whack a little bit, and we had the move in silver was a lot stronger into that 2010, 2011 level here, because silver was actually catching up in terms of this historical long-term average, gold versus silver. And $50 is psychologically an incredibly important level for silver back in the 70s, late 70s. I think that's what silver kind of topped out at. So that's what, the 50 level, again, an incredibly psychologically important level here. It was a nice pullback to end of trend with amateur up bars here testing into 45. And by then the professionals had taken their profits. We had bearish divergence, and we kind of slunk off into this downtrend. We had a Rambo pattern here that we bounced off, similar to gold. We had a Rambo pattern that we bounced off, and so this was showing the amateurs panicking a little bit at this point. It shows a lack of supply. We bounce back up. We come into the 35 type level here, and the professionals step in again as they take profits. We kind of move down again, amateur down bars here showing lack of supply at this point. We bounce back to the 35 levels again. Blue professional bars kind of take profits up here. Cyclical resistance, it's a flush pattern, the last of the buyers, kind of flushing out the buyers here. And then this test back up over the last week, back into 35, got rejected, and we're kind of back down, and these are professionals kind of selling this thing short. And you look at the professional bars in order to see what happens. Did the high or the low kind of get broken afterwards, to show what are the professionals kind of doing at that point. And suggest over the last couple of weeks they've been selling it, kind of expecting kind of continuation of the downtrend. And similar to gold, they use this Thanksgiving weekend to kind of goose the market up above this kind of resistance level here. And again, the silver bug kind of media, the gold bug media, all kind of jumped on board this, saying, we're going to get through 35s, and the uptrend is still in place, and we're going to continue on higher, and so on. So, but just watch out, because we haven't made it through 35. Again, these levels are incredibly important. So you got 50, you got 45 at this point here, then we've got kind of almost 40 here, then 35, and it keeps on getting, doesn't get through there. And so the amateur is thinking, well, I was going to take profits at 40, I was going to take profits at 35, and when it doesn't get there and it gets rejected and it starts going on the way down, they start to panic on the way down. So it's not until we get that exhaustion selling on the downside to mirror this type of activity that we'll end this pattern, and we'll start back up into an uptrend in these things. So, but in terms of bigger picture, what's interesting for me on the gold and silver side is that we're potentially, at these kind of critical levels where we're trying to decide, are we breaking into a serious, a strong downtrend, which I believe we are coming into the new year. And so continuation of weakness in silver and gold will show, because they're anti-US dollar, will show that the US dollar is kind of strengthening. And we've had some weakness over the last week and a half in dollar index, but the bonds have been, the 30, the 10 and the 5 have been really strong, kind of making new highs and about to break to new highs. So we've got money flowing into bonds, and we've got money potentially moving out of gold and silver and into US dollar, and so that means a flight to safety, which would kind of coincide with weakness in the equities market. So remember, this is the end of the year. Potentially we've got a little bit of a Christmas rally to go, but we've also got repositioning happening coming into the new year. All of the big asset allocations are happening, and people setting up for the 2013 story, which 2012 story was continuation of the equity rally. So 2013 people are potentially taking profits, moving into safety assets. The GDP forecasts are down. We don't know what's going to happen in terms of fiscal cliff and so on, but people could be repositioning out of tech, out of equities, into safe haven opportunities and out of equities. So all of that I find quite interesting, and I think 2013 we're seeing this kind of flip happening towards the end of the year. Anyways, so there we go, just a little bit of discussion about kind of the psychology of cults and the importance of these different levels and what it means for how the market kind of reacts at them. But we'll see over the next couple of weeks, but my guess was that we'd get a continuation of the down move in silver and gold, and probably in Apple as well. So let's wait and see. Hope your trading's going well.